Vetri Subramaniam, it's always a pleasure and a delight to get him back. When there's madness in the market, he will always come out and say, "Bhaiya, market में कुछ change नहीं होता है." Madness and fear is always part of what is happening. I think April we've seen madness and we've seen what really could be called as a magical comeback. First, everybody thought that nothing in the world will go right when the tariff started rolling in. Now everyone is saying that nothing in the world will go wrong because sanity has come back. So what is the right way of looking at the world first and then markets after that?
I must admit, Nikunj, that not the volatility, because I've seen more volatile markets, but the news flow, which sort of disrupted everything that we know about how economic policy and economic affairs have been conducted across the world for many decades now. Certainly, all of that suddenly came undone, literally overnight, and then we've seen multiple attempts back and forth. But without going into that without too much detail, because honestly, we still don't know uh, what the final destination is and where the US policy and where China itself will be able to sort of readjust their thought processes. uh, I think the bigger question is, all of this really creates a lot of uncertainty. I think the biggest sort of victim of this uncertainty will be corporate capex. And I'm not referring to India, I'm just referring to across the world. Very hard for companies to take a call on where to build capacity, how to build capacity when you've got so many moving parts. Obviously, at some level, even in India, those decisions will be held back. And then finally, that will also translate into some level of uncertainty on the parts of consumers who may decide to hold back on big ticket decisions because they're also wondering how all of this is going to play out. So I think the bigger concern is that you are once again looking at softer macros and softer global growth numbers in the near future.
Vetri, so what is next now? I mean, are we in that? Are we in for a prolonged period of perhaps protracted returns because the world will change, interest rate will change, dollar will change? Are we in for this bad patch of macro adjustments and which will keep everybody guessing?
It's certainly a tricky scenario, very hard to figure out how it will play out. We were having this conversation 3 weeks ago. We wouldn't have expected that the markets would bounce back as strongly as they did. But, I always think it's useful to start with where you are in valuations when thinking about this. Large cap valuations in India, after being rich, actually came back into the fair value zone. In fact, at the low point in April, they actually went for the first time in a long number of months into what I would call the attractive zone. We are still in fair value. We are not really cheap in that sense, but certainly lot better value across the market cap spectrum than compared to where we were 6 or 8 months ago. So I would just say proceed with caution, navigate carefully. This is the time to continue to manage risk. You would worry about where the earnings are. And what we've been telling investors is one of the best ways to navigate this level of uncertainty is actually to look at the hybrid category of funds where you're getting a good carry on the fixed income part of the portfolio, and you're not 100% invested in equity, so you're able to navigate the volatility much better. So I would say yes, we are in a little bit of maybe an uncertain environment where best to allow that to reflect in your asset allocation.
Right. Good morning, Vetri. The shares also joining in the conversation, and I wanted to actually talk about this new NFO of yours. Given the fact that you all have launched the UTI multi-cap fund, at this point in time, I wanted to understand the rationale. What does it consist of, and what should one actually watch out for in this one?
Good question, and I've been asked this many times. Is this a good time? Is this the right time? Is this the wrong time? And my only answer to that is there is no good time or wrong time to launch a fund strategy like the multi-cap fund. Look, this is a core diversified fund. The way we described it is uses a 3S strategy, which means it sort of goes across styles of investment. It grows across the market in terms of investing across sectors, and it cuts across the market in terms of investing across sizes of companies, meaning mid, small, and large. So this kind of a portfolio strategy is appropriate for any investor who's really thinking about where do I want to invest for the next 5-year, 10-year, 20-year, 30-year journey that I'm going to have as an investor. This is not a strategy where you're thinking about, okay, I need to come in now. There is a sectoral opportunity, there is a thematic opportunity, and then somewhere down the road, I'll have to take money out of it again. This is really the kind of strategy which sits at the core of your portfolio. So my answer to that would be think of this as your core. There's no right time or wrong time to invest in a strategy like this. The most important thing about time in this strategy is to think long term. And therefore, I would say think about it as long term rather than right time or wrong time.
All right. Hi, Vetri. Good morning. This is Shrishti also joining in. But Vetri, given the run-up that we have seen from those April lows, and especially for the Indian markets, it is heartening to note the fact that the FIs have made a comeback. But Vetri, if somebody has to put in a fresh money in this particular month and take a medium to long-term time horizon, which space do you believe offers good opportunities? Because I remember your January take with us that the Smiths valuations are looking expensive, the financials are looking good, but how do you see the allocation moving up from here on?
Yeah, good question, Srishti. To put it in perspective, not much has changed in my opinion as far as the SMIDs are concerned. I still find the mid cap valuations extremely pricey. Same for small caps. Obviously, I'm talking about the top down aggregates. Once you peel it away, you may find some opportunities here and there which still look okay, particularly in light of the sell off we've seen in the last 6 months. But as a top down asset allocator, mid cap and small cap is not where I would want to go. A lot more comfort in the large cap space. And from a sectoral perspective, I'll still hold on to the banking and financial services as the one sector where we think valuations are still supportive. I'm happy to see that it's done well over the last 6 months, 12 months. But I think over there is still an opportunity for this sector to do well because they've got pretty solid sort of balance sheets when I look at it on an aggregate basis. And I think, one of the few ways in which the Indian economy will be able to sort of push, some fuel into the economy is that we've had credit growth at just about 11-12% last year. I think there is scope for that to accelerate closer to 13-14%, which becomes more possible today because the RBI has started to intervene aggressively in terms of putting liquidity into the market. And as you know, the MPC has already cut rates and they have shifted to a policy stance of being accommodative. So I think the macro situation, along with valuations, places BFS even today in a good scenario.
Do you see the comeback trade in IT? Do you see the comeback trade in government-dominated businesses? Because that's where we've had a problem. I mean, last year government spending was low because of elections. This year IT companies have suffered because of what is happening in US on AI. Can those sectors come back?
I think, as far as government is concerned, look, the reality is that the government is still continuing to compress fiscal deficit even in FY26, not as dramatically as the last 2 years, but they will compress it, which means government impetus to the economy is still limited. And remember, their fiscal trajectory for the next 5 years means that they will have to continue to bring fiscal deficit down. So I don't see government spending as a driver unless the government sort of suddenly changes its mind and say, no, we want to go in the opposite direction to support the economy. As far as IT is concerned, the sector had a massive run up. It's literally been like this inverted V, right? It had this huge run up into the Trump election and coming to power, saying the tax cuts will drive IT spending by US businesses, and then into this entire tariff related uncertainty. Remember, I used that word earlier. Obviously now there are concerns that companies may be hesitant to spend on new IT initiatives in the US or for that matter globally. And that's caused these stocks to sell off. I think there's now better value starting to emerge in IT. When I look at their free cash flow yields, some of the large cap names are at 4-5% free cash flow yields. So the valuations have become more reasonable. I think incrementally that could be an area to look at. You made a point about AI. Certainly their business models will face some challenges from AI, but at the same time, looking at the IT sector as I have for many years now, what we've seen is that every time there is a new wave in technology, the companies that are able to pivot to provide services upstream of where the disruption is happening have actually managed to continue to navigate that well. So, of course, we'll have to see which companies are able to retrain, reallocate resources into upstream areas of implementation of AI. But I think some of them may actually get a tailwind, but that may still be 1 to 2 years away.
The other challenge for the market is what happens to IPOs, what happens to promoter stake sales. While April has been clean because there were no IPOs and promoters never wanted to sell at that price. Do you think that same flywheel will start again? IPOs will start, FPOs will start, QS will start, NFOs will start, which have started.
Well, interesting you put it that way. I think this is a natural market mechanism, right? I mean, when the market is very buoyant, the supply side responded, be it through IPOs, QIPs, OFS, promoters selling down. The minute the secondary market became less buoyant, automatically the supply side of the equation started to pull back. So I think there's a natural balancing that happens over here. And without doubt, I think, Nikunj, you need to see a lot more excitement and maybe a little bit more stability in terms of policy before I think a very big window for IPOs and fresh supply of paper starts to open up again. But I think that's a natural balancing equation. Keep in mind that eventually capital markets exist so that people with capital can provide it to the entrepreneurs who need capital. So I never look at supply as something which is negative for stock prices. For a healthy capital market, for the economy to grow, capital mobilization and investment is part of that, and that is the way I think we as investors should think about it.
All right, Vetri, so good to have you on ET Now today. Thank you so much for taking the time out and speaking with us.
Thank you.
If you like this video, then like, share and subscribe to ET Now.